Hey everyone, welcome to the Millionaire Code. Now, one of the most common worry in people is, how can I start building wealth? And you know what? It's a question we are incredibly passionate about. Look, for a lot of people, the world of investing can seem intimidating, but let us tell you, you don't need to be a Wall Street whiz or a financial expert to start growing your money. That's why in today's video, we're going to break down 5 beginner-friendly investments that can help you get started on your wealth-building journey in 2024. So whether you've got $100 to invest or $10,000, stick around, because this video is for you. Welcome to the Millionaire Code, where we unlock the secrets to financial freedom. Alright, let's kick things off with index funds. Now, I'm a huge advocate for passive investing, and index funds are the cornerstone of that strategy. Instead of trying to pick individual stocks, which can feel like gambling, index funds let you invest in the entire stock market through a single investment. Think of it like this. An index fund is like a basket that holds a variety of different stocks from a specific market segment, like the S&P 500. This means that by investing in an index fund, you're automatically diversifying your portfolio across hundreds of different companies. And diversification, my friends, is key. When you spread your investments across different assets, you're less likely to be wiped out by a downturn in any one particular stock or sector. Another great thing about index funds is that they typically have much lower fees compared to actively managed mutual funds. With index funds, you're keeping more of your hard-earned money working for you. So, if you're just starting out, index funds are a fantastic way to dip your toes into the stock market without the stress of picking individual stocks. Next up, we've got real estate investment trusts, or REITs for short. Now, we all know that real estate can be a powerful wealth-building tool. But let's be real, not everyone has the cash lying around to buy a rental property or flip houses. That's where REITs come in. REITs are companies that own and operate income-producing real estate properties like shopping malls, apartment buildings, or even cell towers. And the best part? You can invest in these properties without actually having to buy or manage them yourself. Think of REITs like buying a tiny slice of ownership in a massive real estate portfolio. When you invest in a REIT, you're essentially buying shares of that company, and as the company makes money from rent or property sales, they distribute those profits to shareholders in the form of dividends. REITs are known for their juicy dividend yields. This makes REITs a fantastic option for investors looking for a steady stream of passive income. No matter which type you choose, REITs can be a great way to diversify your portfolio beyond traditional stocks and bonds. Now, let's talk about an investment that's all about safety and stability: high-yield savings accounts. Look, I know what you're thinking, Graham. A savings account isn't exactly the most exciting investment, and you're right, it's not going to make you rich overnight. But here's the thing. Every solid financial plan needs a foundation of safety and liquidity. That's where high-yield savings accounts come in. They offer a place to park your money that's FDIC insured, meaning your deposits are protected up to $250,000 per depositor per insured bank in case the bank fails. But unlike your traditional brick-and-mortar bank savings account that earns a measly 0.01% interest, high-yield savings accounts offered by online banks can offer significantly higher interest rates. I'm talking 10 to even 20 times higher. Now, I know you might be thinking, okay, but how much of a difference can a few percentage points really make? Well, let me tell you, it adds up over time, especially with the power of compound interest. Compound interest is like magic. So, while you might not get rich quick with a high-yield savings account, it's a fantastic way to earn a decent return on your money while keeping it safe and accessible. Alright, let's talk about a game changer for hands-off investors: robo-advisors. Now, robo-advisors have revolutionized the way people invest, making it easier and more accessible than ever before. Essentially, robo-advisors are automated platforms that create and manage your investment portfolio for you based on your financial goals, risk tolerance, and time horizon. Think of it like having a personal financial advisor in your pocket, but without the hefty fees. When you sign up with a robo-advisor, you'll typically fill out a questionnaire about your financial situation, investment goals, and how much risk you're comfortable taking. Based on your answers, the robo-advisor will then create a diversified portfolio of low-cost investments, typically index funds and ETFs, that align with your specific needs. The robo-advisor will automatically rebalance your portfolio over time to make sure you're staying on track to reach your goals. This means you don't have to worry about constantly monitoring the market, researching individual stocks, or trying to time the perfect buy or sell. So if you're looking for a stress-free, hands-off approach to investing, robo-advisors are definitely worth checking out. Lastly, let's talk about a strategy that's near and dear to my heart: dividend investing. Now, who doesn't love the idea of earning passive income? That's exactly what dividend stocks allow you to do. When you invest in dividend stocks, you're essentially buying a piece of a company that pays out a portion of its profits to shareholders on a regular basis, typically quarterly. These payouts are called dividends, and they can provide a steady stream of passive income that you can use to reinvest, pay bills, or even treat yourself. Not all companies pay dividends. Some companies choose to reinvest all of their profits back into the business to fuel growth, while others prefer to reward their shareholders with regular cash payouts. When choosing dividend stocks, it's important to look for companies with a history of consistent dividend payments and a track record of increasing those dividends over time. This indicates that the company is financially healthy and committed to returning value to its shareholders. So it's important to do your research and choose companies that you believe have a sustainable business model and a strong track record of dividend payments. So there you have it, 5 beginner-friendly investments to help you kickstart your wealth-building journey in 2024. Remember, building wealth takes time, patience, and a solid strategy. Don't get discouraged if you don't see results overnight. The most important thing is to start investing early and consistently, even if it's just a small amount each month. Over time, those small contributions can add up to significant wealth, thanks to the power of compound interest. And hey, if you found this video helpful, make sure to give it a thumbs up, subscribe to the channel for more wealth-building tips, and hit that notification bell so you never miss an episode of The Millionaire Code. Remember, the key to success is consistency and patience. Till then, keep growing.